All right.
Yeah?
Yeah.
We is live?
We is live, ladies and gentlemen.
Raise the roof. We are, as you can see, in the bunker here today. We're missing one, unfortunately. No Q on board with us. I think he had a little too much strong Russian vodka yesterday. Or either that or he's got the coronavirus, so one or the other. But we wish him, a quick and healthy recovery, of course. So for now, we're recording from my man Dimitri's studio today.
Yes. We are in the USSR, holding it down while my man is recovering it. Fortunately, one of us did not make it through the weekend.
No.
So
R.I.P.
But here we are coming in with the hottest news as always. We got lots of things to talk about. We missed Layer1Live last Monday, so we got to cover some of the stuff.
Yeah, I haven't been here in months, it feels like. Because you guys been hitting the interviews. I was sick there for a while. I had the coronavirus. I think I kicked it now. Man, it's been... I'm happy to be back, man. Happy to be back in front of the peoples talking news. We've got... a lot of rumors on some breaking news we'll get to.
People love rumors, man.
Oh, yeah. We tinfoil hat it a little bit. Got some quick news as always. Just kind of some points to talk through on some major protocols. And then a heavy discussion section before we really get into BTC, ETH, little VeChain news, some funny Litecoin news, and of course some Binance and BNB news. So it should be a packed episode, man. We're gonna be here for a little while talking through this. But before we get started, anything else?
No, not much. Yeah. Looks like Zach is in the chat, so he's fingers are working, he's typing.
Proof of life.
Yeah, proof of life is there. Hopefully we sound good, so we can get started. So strap in.
Absolutely. Well, let's get right to it here. So this isn't super breaking news, but I wanted to throw it in basically at the beginning of the episode here. There's evidently been some kind of weird rumors going around that there's some sort of Binance Cloud that's going to be launched. This is something that CZ has alluded to a little bit, where, let's see, this was posted on the 8th, now's the 10th. So it should be in about 8 days, maybe about a week from now, this kind of quote-unquote Binance Cloud is going to launch. No one really knows what it is. They've done a good job of kind of keeping it pretty tight-lipped. When you hear cloud, you think like cloud infrastructure. And evidently, according to this Cointelegraph article, and as you can see on the Binance website, they're hiring for a senior cloud engineer. So, is Binance kind of moving into cloud services? I would say probably not. I think it has more to do with probably the Binance chain and maybe some sort of like cloud infrastructure they're trying to build on the back end, so that maybe instead of people using AWS for nodes, they can use Binance's own cloud or something like that. But we haven't really seen a giant kind of announcement or a giant new development from Binance in a long time. So that now this is coming obviously at a time when Bitcoin has been pumping, BNB's done very well. It's good to see come through.
Yeah, the thing about the cloud, the first thing that I thought of is basically that AWS, they're trying to attack Amazon in that sense, basically because so you don't have to go to Amazon to set up the server, to set up your nodes and whatnot, especially with the fact that like we have more staking, networks coming up, with ETH and so on, right? So I think, for them to come in and try to compete with AWS in that sense, where you can just set up a server and be through Binance, that's huge. And it's crazy to see Binance kind of like, spread themselves into so many different areas, right? But they're also very successful in that, right? So we've seen, other companies try to do that, and they kind of, start it all up, but nothing really catches on, right? And we're going to talk about a little bit of a consensus, right? Later on too as well. That's going to be the big one. I feel like I'm on my mic. Okay. Anyway, so that's my thoughts about the Binance Cloud.
Yeah, we'll see. I mean, like I said, it's about 7-8 days away here. So, not a ton of wait time, fortunately. We'll see. It'll be interesting to see what they come through. We got Mr. Scott Firestone in the chat. What's up, my man?
Yep.
Listening in at work. It's a Monday, so nothing gets done on Mondays. No worries there. Second piece of, again, kind of semi-breaking news here. This came out a few days ago as well, but kind of a rumor that flew under the radar a little bit. But according to a Federal Reserve governor, which essentially there's like a board of governors that work within the Federal Reserve, one of them has said that the Fed is researching a digital dollar, which, it's coming from someone in the Federal Reserve. When I first read it, I was like, I don't think she should have said that. So I think, it's enough to kind of at least talk about the rumor on Layer1Live. It was posted on Masari. Quick kind of little, blurb here about how she was basically saying that, and straight from a quote here, by transforming payments, digitalization has the potential to deliver greater value and convenience at lower cost. Given the dollar's important role, it is essential that we remain on the frontier of research and policy development regarding CBDC, which would be central bank digital currency. So this would obviously be massive. I mean, you see littler countries, like in Uzbekistan or others that don't fall into like a giant macroeconomic basket like a China or US. When they come out with a digital version of the currency, it's kind of like, okay, whatever, what kind of effect does this have for the greater economy? But the US does it. I mean, pretty much everybody will do it, I would think.
Yeah.
So that could be big.
I mean, we've seen this, obviously time to time comes up from Federal Reserve about digital dollar, right? And then, China is obviously very aggressive in that rhetoric. So I think, US is basically, they need to stay in the front of this digitalization of the country's currency, and not fall behind, because, if other countries like China will deliver that, then, dollar might lose its dominance in the world, right? Because right now we're working with the reserve currency, which is being the dollar, right? And then when you have these digital currencies coming out from other countries, then that kind of undermines the dollar itself. And therefore, I think that's why they're starting to aggressively look into it. And you see like rhetoric from Federal Reserve talking about digitalizing dollars. So they're trying to stay up to date with it.
Yeah.
It's definitely very disruptive for the dollar. Ideally, they want to, kind of let the things remain the same, right? Because they do hold that power over the world with being the reserve currency. But the trends are shifting, and therefore they're, that's how they're, I think, looking to adapt to it. So
I wonder what sort of infrastructure, kind of what pipelines need to be in place for every currency to go, quote unquote digital, right? Mm-hmm. I mean, most business and Forex, I would like, I mean, that's obviously like digital, right? I mean, like so much of the current financial system is digital in a lot of ways, but I'm wondering, what other kind of boxes have to be checked before we get to a point where, this is all now kind of quote unquote digitized or digitalized or however you want to say it. If we start to see those boxes getting checked, I think it would be safe to assume that, that kind of final, hey, it's official, the dollar is digital or whatever, would come into place.
Yeah, it's interesting to see, because right now, like, we have a lot of things that are done in terms of settlements in a manual way through middlemen, banks and settlement companies that do a lot of things manually. And overall, you can even see the transfer of money, right? Why does it take like 1 to 3 business days to settle that, right? So it's like the settlement system is kind of outdated. So I think one of the biggest check boxes that needs to be checked for that is that when we have that settlement system done instantly, and it's and it offers all the benefits of like no double spending and all that stuff, right? That's the reason why 1 to 3 business days is required to settle, because that's when the banks contact the other banks and do the settlements between the books. But it's like, dude, that's an ancient technology, So I think that's going to be huge once it's done. But that's the major checkbox that needs to be.
So it's going to take some time.
Yeah,
it's not going to be like hey, we're gonna launch this by July, 2020 kind of thing. I think it sounds like this will take many years. But if it continues to move the way that it's moving, I think it'll be bullish for other, digital currencies, right? So that's what we got for breaking news here. Like we said when we started the cast here, we got a lot of awesome stuff. We got some people filling in on live now. What's up, Mahmood? Hello. A great episode here. We're talking BTC, we're talking ETH, Consensus, VeChain, Litecoin, Binance. Heavy news week, and it's been a little while since we've done this. Don't forget, this week we've got 2 awesome interviews. We've got, as you can see in the chat there, Peter Key, our main man Pete from Liquid Apps, which is an awesome company that's doing some interesting kind of interoperability work between ETH and EOS, as well as Crypto Kaiju, which is in the NFT space. They've done some really interesting things with NFTs, and you'll hear all about them as those episodes come out this week. We'll definitely have the Liquid Apps one out this week. I'm not sure about the Crypto Kaiju, and then as always, Dimitri's desk. So
Tuesday and Friday.
Yeah. Any other housekeeping points we can think of? Q's usually our housekeeping.
Right. No, I don't think so. Besides our trip to Dallas next week.
Yeah.
So that's gonna be exciting. I don't know how. I mean, we're still gonna have Layer1Live.
2 weeks. 2 weeks we'll be in Dallas. Not next week. Yeah. 2 weeks.
So
gonna go see the motherland.
Yeah.
In 2 weeks, eat some tacos. So we'll hit that Layer1Live here, but we'll take some videos or something for you. Gonna go see Mr. Zach Lee. So let's get right into it. I'm gonna hit these first quick news here. If you want to hit,
I want to hit the XRP.
You want to hit the XRP? All right, cool. So quick news segment here. We try to just make sure you guys are aware of some of these bigger points, kind of bigger news stories, but don't really need discussion around them. So first one is Tezos. Tezos has been crushing it. 2 points there. Another real estate firm has basically joined on to Tezos for STO fundraising. This has happened 3 or 4 times already, it feels, definitely globally. This one's actually based in Texas. So they were originally looking at using Ethereum to, essentially tokenize real estate fundraising, say for different development properties they were working on. But instead, because of this blooming STO ecosystem on Tezos, they're going to be selecting Tezos. So big addition in the US there for Tezos. They've also moved, this was as of a day or 2 ago, back into the top 10 on market cap.
Oh, yeah.
So they had a crazy pump a few months ago towards the end of 2019 that sent them into the top 10, and they kind of fell back out of that and dropped down to maybe 15 or 16 by market cap. Well, they're back into the top 10. I think the price is almost at $3 now.
Things are looking good.
Things are looking good if you're holding Tezos. Shout out to CZ if you're holding Tezos, because as we've seen in the past and as we've talked about in the past on Layer1Live, when he goes and lists a lot of these tokens on perpetual contracts on Binance, so these perpetual futures contracts, the token seems to pump. And we saw that again with Tezos. We saw it with Monero when they launched. And we saw it with so many others. EOS, that was kind of the start of the EOS pump off the bottom there. So Tezos is doing really well.
Yeah, and they mentioned the reason why they went to Tezos over ETH is because of like the faster speed and efficiency there that they like. So that's good stuff there. Next piece of news: XRP remittance network expanding in Latin America. Ripple partner launching crypto. Basically, there's an exchange in Latin America that now offers you to buy crypto with Argentinian peso. And it's very interesting because like I've talked about this many times where in distressed countries, like we know Argentina has been struggling with their currency against the dollar. If you pull up the chart, that looks like an altcoin basically, that dumped a lot. So, and I was talking about how we need good onboarding tools for people in these distressed countries to be able to purchase crypto. And this is exactly what we're getting from Ripple's partner exchange that's launching this, liquidity for people that want to, let's say, get out of Argentinian peso or hedge their risk by buying crypto, at relatively good market pricing, right? Because the problem is that right now, due to limited liquidity in these distressed countries, people end up paying a huge premium when they go to like local Bitcoin, right, to buy it. So they overpaid the market price, and it's not efficient, and you're not really capturing the demand that should be coming from those distressed countries, for the cryptocurrency. So this is great news. I'm excited to see that. We'll see how much demand is going to come for that.
I mean, we don't think about it a lot because we've had exchanges offering fair market prices for years and years, but there's still many countries that don't have that. So every time, whether it's XRP or Binance or whomever, kind of onboarding one of these smaller countries in Latin America or in the East or whatever it is, it's it's another one on board with at least being able to purchase crypto at a fair price.
Right.
So
and the next one is so DeFi weekly report came out, and looks like we have $1.5 billion locked up in, I think it was like 14 different, or no, it was like 32 different DeFi projects.
Yeah. Maker obviously is the biggest.
Yeah, they have like over 500 million.
Yeah, about a third of the total lockup. Yeah.
So that's huge.
I thought it was a lot higher.
For Maker?
Yeah, I'm surprised. Yeah. I mean, that's, I thought it was pretty much Maker and then, some percentage points of everybody else. But that's, it's good to see they're starting to spread it out. It's, if you do the math, I think it's something like 4 million ETH.
Yeah.
That they said was in lockup. So it's crazy, man. DeFi continues to keep rolling here. Which, kind of speaking of Ethereum here a bit and DeFi, a major kind of component to that has been Chainlink here over the past few months or year. Chainlink has steadily grown its oracles from about 7 on Ethereum to now 25.
Wow.
Which is pretty significant. These oracles are basically price feeds that run on Ethereum. So they're helping DeFi, they're helping other smart contracts, they're helping other applications. But everybody that we've talked to is very confident in Chainlink and their decentralized oracle setup. For a long time, I think everybody was kind of like, wait and see on Chainlink a little bit, even after they had like that crazy pump in 2019 all the way up to, $7 or something like that.
That was during the bear market.
Yeah, right? During the bear market, they got a lot of press because of that, but not necessarily on the tech front. And they've just, they've continued to build and build. So good to see from Chainlink there. They're doing what they're supposed to do. And then, on your futures, man, we got some all-time highs, huh?
Yeah, man. So futures are popping off. Super excited about that. Basically, backed and CME hit all-time 3.5 months high in terms of trading volume. But you have to point out that CME is the one that's actually driving more volume than backed, and we've actually seen in the options market how back got wrecked with the volume there. Back came out with Bitcoin options before CME. And they had a little bit of volume there, but once CME came out, looks like everybody switched to CME to trade options there. So the options market in CME is heating up as well as futures. So it's good to see that CME is dominating futures and options for BTC. I'll go over that on desk quite a bit. Follow the sentiment there to see what's going on there. To see how those guys interpret, especially you get in, some of the commodities guys, that are trading, with CME, starting to get into Bitcoin and ETH, that's some big stuff.
Yeah, we've got that coming later in the episode. The CFTC is pushing ETH futures, so we'll get to that. But this is interesting, right? As the final point here on quick news before we move into kind of some broader based discussion topics. I can't remember a time when there was enough volume and there was kind of this very institutional group that we could look to, right? We haven't ever seen that in crypto. It's kind of funny, right? To me, it's almost a marker on this quote unquote institutionalization of crypto happening, where now it's every week. It's like, hey, what's the CME at for volume? It's oh my god, they're at another all-time high, or they're at a 3-month high, and we've never really had that. It's always just kind of been this conflated mix between spot volume on your Coinbase or your Bitfinex or your Binance, where it's like, okay, well, we don't really know who's buying that, or on your on your traditional crypto futures exchanges like your BitMEX and whatnot, like it was always generally assumed that that wasn't your more US based institutional clients, just because the counterparty risk was too high for them to use it. But you know, it's very clear with the CME who is participating.
Yeah.
So it's like, oh, you know, what are the folks on Wall Street and in Chicago and like, what do they think? You know, so it's super cool.
Also, on top of the fact that you're getting the volume from a regulated entity, you also get in a report, which is Commitment of Traders report that I cover, you know, all the time. And that shows you the positioning of, you know, asset managers and the actual CME group. And, you know, this is different, way different than, you know, using like, let's say Coin Farm to see how traders are positioned on like BitMEX, right? This is actual official report that comes out for commodities, and they include Bitcoin now, which is significant. You can see how these players are positioned in the market. So yeah, it's super fascinating.
A lot of asset managers holding short right now, right?
Yeah. So they're getting wrecked.
It's not good. They're sweating. You know, I'm sure they're not giant positions. No, you know, they're not holding shorts like I'm sure a lot of them were holding shorts on Tesla.
Yeah.
I saw this morning that Tesla had over like $8 billion lost in the in short sales during that whole crazy price run as we saw over the last week or so here. But if you remember, if we rewind to spring of 2019, right, a few months from the point that we're at now in 2020, that run up to 14K was a lot of short sellers, a lot of those same fund managers, asset managers getting liquidated, right? I think that as people come to crypto, they learn the hard way that some of the technical indicators that would apply in traditional finance don't necessarily apply in crypto, or that when you have some of these runs start where we bounce off 8K or whatever it was and just go straight up to 10K, right? Traditional markets, you would say we short here, but with crypto, with Bitcoin, it's like, don't get in front of that steamroller, man. I mean, we got the halving coming up. It's I'm not short here, that's for sure. So we'll see what happens to those guys.
Yeah, the trend definitely changed. So, and I those traders that are coming in from trading like commodities and other things, are getting a wake up call of how this market works. Right. So I've been observing those asset managers for quite some time. They flip flop a lot, right? So, I like to follow the desk, the CME desk rather than asset managers, because asset managers are often wrong, and the desk takes the other side of their trades. So
right, yeah.
So that's the beauty.
They're winning big time.
Exactly.
So anyway, yeah, interesting news there. All signs are pointing to more volume, more good things happening in crypto. There was a cool article that came out on Yahoo Finance talking about kind of a bull case in 2020 for Bitcoin. And essentially the answer here was that macroeconomic sentiment should be the biggest bull case for crypto. The halving is obviously a big thing, right? It's kind of this giant PR event for crypto in a lot of ways. But as we've seen over the last few months with things like crypto moving in line with gold, or this influx of institutional volume coming in, like we're talking about, it's starting to really, especially Bitcoin, it's starting to fall into this, as I said, this macroeconomic, kind of strategy or at least narrative, or especially with things happening like the coronavirus, or if we have any sort of other, unexpected event that happens in the larger economy. Maybe it's the election later in the year, right? For the U.S., but. It's an interesting article. They talk about some of the things that they think could be catalysts for Bitcoin from a macroeconomic standpoint.
Yeah, one thing that they cover I really like is Q4 2019, basically how news dominated by basically China, and then also more derivatives coming out for crypto assets. So you have more derivatives that are playing out products from regulated and from unregulated entities, which is helping out overall the liquidity and price discovery for Bitcoin. And then also another thing that really caught my attention in Q4 2019 was the range of acquisitions and fundraising, which pointed out to possible consolidation. Many companies, which we've talked about I was waiting for this moment when we're going to get the, mergers and acquisitions in crypto, because then, when the overall market consolidates and you have certain players that, let's say, get bought out or acquired by bigger companies, and then you have consolidation of the market, maybe less exchanges, some exchanges coming in, buying up certain services and so on. So that's starting to pick up a little bit. We're still not there at the very hottest moment, but we're essentially heading that way. And I think, also this, during bear markets, this should be more popular, right? Because during bear markets where companies get squeezed out, their capital runs low. Meanwhile, big companies like Binance, Coinbase, and so on, they're sitting on a lot of cash, right? And they, it's a typical thing that you do. You pile up on cash. When bad times come, you start going shopping, right? And you start acquiring all these companies for the next bull run. So that continues to happen, and it shows the sophistication of the market, right? So as we're getting into mergers and acquisitions, that's why I really like that point out of that article for the bull for BTC.
Yep. Yeah, it comes from Amoon, a company, I believe they're in Switzerland, but they have launched quite a few regulated crypto products. They were the one that launched the ETP for Tezos, or the exchange traded product for Tezos. So, they've got their finger on the pulse for sure. But let us know what you guys think in the chat, right? I mean, there fortunately, as we have moved into 2020 here, a lot of positive drivers for Bitcoin and for crypto, whether it's the digital, kind of dollarization of things, if it's the halving, right? Let us know, what are your guys' biggest bull case? What are your guys' biggest bear case, and why? And we can kind of talk through them there. But I think macroeconomic sentiment is definitely one.
Did you see Scott's comment? Worst trade was Bitcoin for BitConnect.
Yeah.
Oof, my man.
Oh man, I think I think Q's talking through worst trade, so we'll probably have Substratum pop up there for me. That was a bad one. I was actually talking about that last night with some family. But
it's funny because I was talking to one of my friends, and I was telling him about crypto, and he was like, "Yeah, man, I got scammed in crypto." And I was like, "What do you mean?" And he was like, "Yeah, I invested 5,000 in crypto and I lost it all." And I was like, "What did you invest in?" And he was like, "I bought BitConnect." Oof. I was like, "Really? Like, this is your first experience in crypto? You go to BitConnect?" And he was like, "Yeah, my friend told me you get like interest there." And I was like, "God, man!" Like, and then it's like you have people like that just get into crypto, and the first experience they have is this. Like,
they're never coming back. Yeah,
exactly. So that's
it's like, oof, it's rough, man. There's just that's bad luck for sure. I mean, what can you do?
Barry's in the house.
What up, Barry?
He's talking about my eyebrows.
Oh no, yeah, we need a haircut. That's why I'm wearing a hat, man. Oof, yeah, Scott,
10,000, wow, yeah.
10 G's on that BitConnect, man. Oof, that's tough. That is tough. Well, hey, we're going to move forward here a little bit. Super interesting Tether article that came out on Bitcoinist, which is one of my favorite news sites here. So essentially, Coinmetrics, which is a firm that tracks a lot of activity on the blockchain, on the various blockchains, released some new findings on Tether that talks about how there is essentially an all-time high when it comes to velocity, right? Meaning that the activity around Tether has basically been higher than it's ever been. They found that every single USDT token, when you do the math, is traded approximately 46 times a year.
Wow.
So almost once a year. Once a week, every week each year. So that's pretty significant. They had a tweet come out that showed essentially the trailing 12-month velocity of Tether when it was on Omni, Ethereum, and Tron. And now that it's moved to Ethereum, it's basically consistently increased since September. And as I said, sits at a new all-time high for velocity. Now, the interesting thing when looking at this report, understanding what crypto has done over the last few months here, even back in 2019 when we pumped up to about 13 or 14K, generally what you see is a correlation between the price increasing and Tether increasing supply, meaning that they're printing new,
because there's more demand for Tether.
Exactly, right? Somebody comes in, they want to buy $100 million worth of Bitcoin, so Tether prints $100 million. But we haven't seen that, which, as we were going over this pre-show, basically brought up my question being, well, what's going on behind the scenes? Is
Right.
you know, is Tether trying to get reserves back to 100%? Could that be happening? Is this the case because of, you know, the shift to ETH? You know, like, why are they kind of using the current supply and it's turning over more and more versus actually, and you know, we're seeing the price increase versus the kind of typical Tether setup where, you know, money comes in, Tether prints, Bitcoin gets bought, price goes up. Rinse, repeat.
I read an article that came out about Tether exchange for the Chinese yuan and how it was trading at the premium. Or actually, hold on, let me see. Yeah, basically the demand for Tether from Asia is picking up, so it's going higher, and it's interesting to see, again, to the point that you have this happening, right, but you don't have more Tether supply that's being pumped out while the market is demanding more Tether to be purchased. So but my thing about Tether, also, like, they're obviously dealing with a lot of legal issues, right, from regulators. And then we also have a lot of good stable coins available now that are regulated, right? So I'm surprised those are not outperforming Tether yet, So
Tether's remained the baby in crypto when it comes to stable coins. I mean, they've had all these issues. It was what I think 2018 when it dropped to like 88 cents or 89 cents on the dollar, and they recovered well from that. Now they've got this lawsuit with the Attorney General of New York. I mean, it's just one thing after another, but they continue to crush it. The activity is even larger than Bitcoin. So the USDT volumes,
crazy,
nuts. It's crazy. The USDT volumes are at $44 billion in daily activity. Bitcoin's at $32 billion.
Yeah, what?
Right? So it's like, 33% higher than Bitcoin trading volumes. Clearly it's working.
Yeah.
Right? I mean, how far off is that from like traditional Forex volumes?
Oh man, then it's
pretty far.
Yeah,
so we're talking hundreds of billions or trillions moved.
Yeah, trillions.
Yeah. Okay. So we're not even, we're not even close. But, it obviously brings up the point, right? As we talk about the Fed considering a digital dollar, as we have China considering all these digital currencies, like Tether continues to grow. It's a dollar pegged, token, and people are using it to the effect of $44 billion every day. I'm just imagining a scenario where the U.S. comes out with this digital dollar, China comes out with their digital currency, all these other countries have these digital currencies, and then you have like USDT. That's kind of just like, hey, we're trading $500 billion worth of USDT every day. And it's like, okay, well, how does this kind of fit into the whole scheme of things with the other digital currencies? And it starts to get weird.
Yeah, you know what? I was reading articles before about how Tether is used for international payments between two countries. And there were tests done to perform this, right? To move Tether, let's say, especially, it gets into a situation where you have certain countries that are sanctioned, and they're prohibited from receiving funds or whatnot, right? But Tether is something that was used as an experiment in those situations to move money around, to go around the SWIFT, and all the OFAC countries and so on. So
right.
I think that could be, if that scales up higher, then you'll see some ridiculous volumes on Tether to continue to go higher. So for Forex, we trade 5 trillion a day.
Across all currencies, though.
Right.
Yeah.
Yeah, across all. Yeah.
Right.
Yeah.
So it's obviously much smaller. It's a fraction, but hey, like I said, I mean it's still hanging around. Barry had a good point. He said Tether is a good lesson in first mover advantage in many ways.
Yeah,
and that's very true. I mean, Tether's been here since 2012, 2013, 2014, maybe probably 2014, I would guess. Yeah. That's kind of like when most other crypto businesses started. It was like 2014 because it was just Mt. Gox and a bunch of other stuff kind of before that point.
Bitfinex
launching that Tether. Yeah, it's doing well, man. It's doing well. So
What's going on with Cosmos? Some weird stuff is happening there. Speaking of weird stuff.
Good question, man. I have some Cosmos myself, and it has been doing well over the last 12 to 18 months. But this is a strange story coming from Cosmos and Tendermint, which is, essentially a company that kind of works within the whole Cosmos ecosystem, as I understand it. So there's a guy by the name of Jay Kwan, who he's the CEO of Tendermint. He basically runs the ship at Cosmos. He had reportedly stepped down from this position. CoinDesk reported that. A bunch of people reported it. It was unexpected, I think, at least for those outside of Cosmos and outside of Tendermint. But now he's kind of talking crazy here. He had a quote come out that said, "If something should happen to me, be critical and share your opinions respectfully. But everything I'm doing is in fact making me a target," says Jay Kwan, the main architect of the Cosmos protocol. And this reporter here on CoinDesk dug a little bit deeper. Brady Dale, I've seen him on Twitter. He seems to do a good job. He dug a little bit deeper, obviously talked about, Cosmos and some of the success they've had. But it turns out that Jay Kwan has been working on another project for about 6 or 7 months called Virgo, which when you do research is kind of like that typical crypto project who no one really has any idea what it is or what it's going to do, but it's getting a lot of hype because, somebody who has done well with other projects, i.e. Cosmos, is launching it. They came out with this manifesto talk essentially on it at CESC 2019. So the video is a little dated here, but it talks about like Virgo solving social service issues and financial privacy and open source software and taxation and it's like Jesus coin here solving
the first AI blockchain,
exactly,
addressing scalability.
They big plans here, and behind the scenes evidently people have not been happy at Cosmos or IBC, which is kind of the entity behind Cosmos, saying that basically that's been Mr. Kwan's focus over the last 6 months. He has not done enough work on Cosmos, and things have kind of fallen by the wayside there. So I would imagine that is part of the reason he was stepping down, is because that wasn't his focus.
He didn't officially admit it, right? Like it was. I don't think he actually came out and said he's stepping down. It's more of like people internally are saying that he is basically getting away from working on Cosmos and is mainly working on Virgo now. Yeah,
very specifically, it was the director of Tendermint Labs, where they tweeted on Twitter in a big thread that says, roughly over the last 6 months, Jay has obsessively focused on Virgo while neglecting and under-resourcing IBC, i.e., Tendermint and Cosmos.
He doesn't sound happy.
This Manian guy is really the other best known person in Cosmos other than Kwan. And so, things aren't looking good. There's some other kind of weird things here. He's got like multiple personas on Twitter. So he just kind of like tweets from each account and then retweets himself. And, this same director at Tendermint Manian is saying that for the past month, Jay has subjected every internal communication channel to like religious discrimination and loyalty tests and like abusive rants. And he's just, it sounds like to me he's kind of going off the rocker. I don't know if it's a stress thing or what the deal is, but
that's pretty crazy. And I don't know, this first reminded me kind of the Litecoin situation, right? When the founder of Litecoin just dipped,
dumped all his stuff.
But he did it nicely because he had a pretty good statement behind it. He was like, I don't want any conflict of interest,
right?
Therefore I'm gonna leave this network and let it be, so and that has survived. I think overall Cosmos will survive, obviously, the way it is, even without the founder. But that's the drama that's happening behind the scenes is
always drama.
Intense.
Always drama in crypto. And we just had somebody from Polkadot on the podcast. You guys did a great interview with him, and Polkadot is very much a competitor to Cosmos in a lot of ways. So Cosmos has the head start, right? I mean, they're working with Binance, which is huge. Anytime you can, hitch your wagon to Binance, that's going to be good for your project in a lot of ways. And this, if I certainly don't think it's gonna hurt Cosmos in the long term by any means, but it may act as kind of this speed bump for them that will allow Polkadot to catch up and maybe take some market share from them, or at least from a PR standpoint, pull some things away from Cosmos. So we'll keep you guys posted there. If the story continues to stay wonky, we'll make sure to update you. But it was something funky I came across there.
Yeah, no, that's definitely interesting. So next piece of news, Sony invests in tokenization firm Securitize. So Securitize, we've talked to them in the past. These guys basically, in the market for securitizing or creating digital tokens for securities.
Right. STOs.
Right? Yeah, STOs basically. So basically Sony invested in the round for Securitize, and they raised 14 million, but it is unclear how much Sony put in basically in that round that they were raising. So interesting stuff is happening. Just so you guys know, Securitize also has been funded by Ripple, Blockchain Capital, and Coinbase. So these guys are definitely legit. But we haven't really seen much pickup in STOs.
Yeah,
if any. Like it's interesting to see more investment and more money is getting poured into real estate and STOs and so on, right? But we haven't really seen anything major, and it's been already some time, right? It's been
a few years.
Yeah.
I mean, I remember in the at ICO alert, and as ICOs were booming, everybody was talking about how STOs were going to be the next thing, and we went into the bear market in 2018 and into 2019 a bit, and no STOs. I mean, I remember like Polymath was going to be the next Coinbase in crypto, and it's like you haven't heard anything about Polymath. Securitize and Tezos seem to be two that have kind of taken that limelight. But yeah, you're right. I mean, fundamentally, what is going on with STOs? Right. I've always kind of wondered, will STOs be something that we never really do see happen because it happens behind the scenes, right? But to me, the biggest question that remains with STOs is why at this stage do those who will be participating in, say, real estate fundraising rounds for some sort of new development project, right? Or those who might be launching some security on the Tezos blockchain in some way, right? Like, why do these specific industries, say real estate, need security tokens to do what they've always been doing, right? Like, I understand there are all sorts of kind of friction points, if you will, right, in that process. But when you're dealing with multi-million or multi-$100 million real estate deals, to some degree, that friction is always going to exist. And when you implement something new, now you need, industry-wide review, and you need, the regulation to kind of come with it. And you, in a lot of cases, have this old money who don't want to change, right? Even if it's going to get the deal done faster in a week, right? The time that it's going to take to convince those lawyers that there's not issues now with some like digital token that represents, their fundraising in this development, thing is that in and of itself is going to take forever for for the people with the money to say, yeah, let's do it that way.
Yeah. Yeah, I completely agree with you there. I think the using STOs for real estate might open up access to certain people that wouldn't have access to getting STOs. So I think the regulations around it, being the accredited investor and having that bracket of like you have to have X amount of assets to be accredited investor to be able to buy, or invest in these products. I think that's changing, and they're gonna start opening up the doors to people that have less assets, right? That might not qualify as accredited investors to be able to get into STOs. So I think that's just the overall change of just broadening the market for investors to come in, and I think that they're just positioning right now STOs to prepare for that. So once we have that, once the doors open and we can onboard more people through STOs rather than just regular equity, then that would be huge. But until that day,
right. And what is kind of the catalyst for that, right? Like, I guess my point is more of kind of the institutional money coming in, right? Which I think is what people thought would happen at first. They're like, okay, you guys have fun with your ICOs. You raised $4 billion or whatever. That's cool. But we're getting all the big money, and they're going to, they're going to be doing real estate on the blockchain. They're going to be doing, art on the blockchain and all this on the blockchain that we haven't really seen yet outside of like beta tests. So to your point, maybe it is more of kind of this retail movement, right? Where it's, in the same way your mom and pop wants to get into Bitcoin, maybe mom and pop wants to get into fractional art ownership or, fractional real estate ownership. But that for your crypto diehards, right? I find that annual 8 or 11% interest on some sort of development, property, some sort of giant apartment complex, right? Is not very attractive when you can hold Tezos and earn 8% on your investment that way. So it's like, okay, well, why? If I am a younger crypto, why? Okay.
Well, you know why? Because once this starts happening, the real estate prices will start going up because the demand for it is going to be there. So that's going to be insane. I always, was speculating about when STOs are going to come through for real estate. We're going to get another real estate push like a bubble.
Because of the retail money coming in.
Right. So that would be huge. So then you have retail pumping, and that will make sense, in that case. But yeah, if you have crypto just, out pumping, real estate,
right?
And plus it's the safety thing, in terms of this token is actually backed by a real asset, physical asset, which appeals really well to, retail or investors that don't really want to hold some tokens that they don't understand what they do in a network and whatnot. Like you're saying, okay, I have 100 STO tokens that have X percentage of this real estate property. I can understand that, wrap my head around it, right? But
makes sense.
So
yeah. Scott Harris Firestone said Chintai, which is one of the major EOS ecosystem participants, I think they run a node, is moving forward with STOs on the EOS.io blockchain. Barry said, I question the logic in real world behind the real estate stuff after 29 years in the business. Yeah. I mean, it's, I'm sure there's some crazy stories that Barry's got there. And obviously, after the 2008 kind of housing crisis, I think a lot of people, even, not inside that business, started to really kind of question real estate and the stuff there. But I like your point, right? I mean, that makes sense to me, right? I can see a future where, maybe your aunt or your uncle aren't buying Bitcoin or ETH or VeChain or whatever it is, but they are getting some sort of fractional ownership in a real estate firm. It's my question on that point would be, so I think crypto has done a lot for our generation in giving us access to kind of this new asset class that we can learn about and speculate on, right? Like all of the pipelines were created around Bitcoin, right? Whereas with STOs, I don't see those new pipelines blooming around STOs for people who are really already invest in real estate or equities or these things, right? I think probably to some degree those digital tokens flow through the same pipelines that they already do. But, there are so many people globally that don't invest in equities and so many people that don't have these bank accounts that if you can create those pipelines and make it easy for people to, take some sort of investment in a more risk off, asset than crypto, then maybe we see the same thing coming in. I'm guessing that's what Sony's betting on. That's what Securitize is betting on, kind of this digitalization of, all these real world assets. Yeah,
it's going to be also interesting to see what onboarding tools will be there, right? Who's going to have access to this liquidity of these STOs, right? Is it going to open up to the world? Is it going to open up just for US, let's say, for, only U.S. investors can invest in U.S. property. So it'll be interesting to see how that's gonna go.
Yep.
It's a big factor.
Yeah.
But
we'll see how it plays out. The next story.
The next
here.
topic. Oh God.
Oh man, we couldn't have gone from one end of the spectrum to another here as we go from Sony investing in Securitize to Justin Sun publicly calling Tron a shitcoin on Peter McCormack's Twitter, which has basically lit the crypto Twitter world on fire with more hot takes than I think I've ever seen. So we'll give you guys some context here if you haven't been paying attention, which hopefully you haven't, because this is just a giant waste of time for everybody, I think. There are a few Bitcoin maximalists that started pushing Tron and saying that Tron is super legit. It's the next Bitcoin, right? Like really, really showcasing Tron, but only in an effort to shit on Ethereum, basically, right? So they're saying, hey, look at all these things that Tron does. Look at all these things that ETH doesn't. Tron is so much better than ETH. It's the next Bitcoin, right? It started as a joke. There's some main people on crypto Twitter who have been doing this for a few months, and now it's kind of hit this inflection point where everybody was doing it, right? So many accounts, I mean, they were changing their names to, like, I saw one account, the guy's last name ended in TON, so he just updated it so it would say, Tron, right, basically. And everybody's doubling down on this, trying, everybody who's Bitcoin maximalist, trying to kind of poke fun at the ETH maximalists, saying like Tron does this so much better than ETH. ETH
So
is a shitcoin.
Mainly, I guess.
Major trolling, like classic crypto troll. And it kind of hit a head here with Peter McCormack, a very famous Bitcoin maximalist who also runs a podcast called What Bitcoin Did. He was at some sort of conference, saw Justin, took a video asking Justin, is Tron a shitcoin? Justin says, yes, Tron is a shitcoin. Yeah. He's laughing with somebody else. He's like, wait, Tron is a shitcoin? Yes. Justin reaffirms that Tron is a shitcoin. So, Dimitri posted the link there on Twitter. If you're in the chat on YouTube here, take a look. It's, if you work at Tron, right? If you hold Tron, if you're any sort of, huge Tron enthusiast, like it just... It's not a great look to me. Yeah. It's not what you want, like the founder of this project that you've invested money in to be doing. I don't think it's a huge deal because it's very clear, like the whole thing, right? Like Justin is trying to get in on this whole troll, saying like, yeah, we're so much better than ETH and all this, and I just don't know, like, why go so far as to say that about your project to a Bitcoin maximalist. Justin
is known to do, to go to extremes, and he has a specific kind of style where he does certain things and just like wonder what the hell is going on. They just had finally that dinner with Warren Buffett.
Yep.
So he sent some shit coins to him, he does this stuff where it's like extreme, but at the same time, that video blew up, right? So that video blew up and everybody started talking about it. Everybody started talking about Tron. So at the end of the day, it was kind of like, not cool by him, for him to say that, but he did, like, everybody heard him because they're like, oh, check it out. Tron is, nobody's talking about Tron. Tron is trending because of it, right? So it's all about, the balance there, right? So it's like, how far do you go? To do something crazy like that,
right? Yeah, I mean, it's like, I get it, no press is bad press kind of thing, but you're exactly right. What kind of how far you want to go. Tron's done well this year. Year to date, let's see, they're price wise, they are up from about, they're sitting a little over 2 cents right now, and it was about a penny and a third. So it's up pretty significantly on the year, with a lot of other altcoins. I mean, I know they had a giant pump after that Buffett dinner thing happened and seemingly went well. So listen, I mean, he's doing something right. The price of the coin's working, it's going up. They're doing some things behind the scenes. He's talked about some Samsung things they're working on. That's kind of their big push this year is like getting Tron on Samsung phones. So we'll see. I mean, Tron is certainly in a place where when we see another movement of retail come back into crypto, which I think we will, they're going to be right there at the top of the list. They're 13 in market cap. Everybody and their mom is talking about them on Twitter. So, like I said, no press is bad press kind of thing. Barry's talking about, he said it. I remember weeks ago here, our points chatting on Tron. Yeah, I mean, we're talking about it, right?
Yeah,
People are talking about it. It keeps it in. It keeps it fresh. It keeps people thinking about it, so that when he does come out with that good news, right, the same articles pick him up, right? It's you see the positive and the negative. So yeah, it's time will tell on Tron. I've always thought it's one of those that I think people take as a joke for a long time, and then they go and they execute on a bunch of stuff and like are a major cryptocurrency or a major project to just bring in a ton of retail, and people are like, oh wow, like he actually knew what he was doing.
Yeah, exactly.
So
that's pretty interesting. Anyway, moving along to Bitcoin halving. How do you pronounce that word?
Halving.
Yeah. So less than 3 months away, and exchange deposits have hit a 3-year low.
Boom.
Okay, so
let's break this down.
Yeah, so 3-year low on deposits on fiat or Bitcoin deposits. That
Bitcoin deposits.
Bitcoin.
Yep.
Okay.
Yeah, so that's the key, right? Is that it's the Bitcoin deposits that have slid, meaning that in the same way you could use what are called like hold waves or hodl waves, or a lot of various indicators that track the movement of Bitcoin from wallets to exchanges. You can track from the exchange, obviously, the increase or decrease in BTC being deposited on the exchange.
And we know that, once you get a bunch of notifications from unknown addresses moving to exchanges, that's when we usually can anticipate a dump, right?
Right.
Yeah.
Especially, if you then track, which a lot of places do. Woobull has some charts on it. There are a variety of others. Coinmetrics, I think, I'm sure does it. Coinalysis, maybe. They'll track how long that Bitcoin has not moved, right? So if that Bitcoin hasn't moved for many years, and then after 3 years, 1,000 Bitcoin moves to an exchange because the price is at a high, it's like, all right, come on, what's going on here? But the opposite is basically happening, is what we're saying, is that as price has recovered here off the bottom, we've pumped up. We broke 10K. We've got the halving coming up. We've seen Google search trends bounce off the bottom and increase. We talk about hash rate is way up. We talk about almost every week kind of this new indicator that is trending up. This time it's basically just that Bitcoin deposits to exchanges are at a 3-year low.
Yeah. It's interesting to see how the miners' revenue is going up. Obviously with BTC going higher, and then the overall kind of volatility is kind of slowing down. That could be due to the fact of like people are not, they're hodling, right? They're not dumping massive amounts, so the volatility is overall slowing down. So it's gonna be super interesting to see how that having it's going to affect things, right? Because I wonder if the sentiment will change as we get closer to the halving. Because the thing is also, it's kind of like that, buy the rumor, sell the news type of stuff, where the reason why, that saying exists is because people don't want to hold, let's say, an asset that has a fundamental risk in play that's coming up, right? As it gets very close, like there's uncertainty there, right? So yeah, it can be very, good. Let's say to come out, price might pump even higher. But if it doesn't, then, we can't predict, right? Basically. So something that we can't really predict, and it has a lot of variables, and then a lot of times what happens, people de-risk, de-leverage right before something like this that happens. So it'll be interesting to see what happens to BTC as we get closer and closer to it, right? Right now everybody's locked in right now, so
yeah, I think we've seen over the last 6 weeks here, we've seen people buy in 2020, right? Maybe we had some tax selling, or we had some other people kind of cashing in on some gains from 2019 or selling some losses, but people have seemingly gone ahead and picked up more in anticipation for that halving. So yeah, we still have, a little less than 3 months. A lot can happen in that time in crypto. People are super bullish. They're saying, I'm going to wait and see, right? How high can we go? But generally what happens is after that halving takes place, and you don't have some sort of, magical moment, people start to sell and you see a dip, right? And a lot of people get out, maybe they made 40%, make good money. And then towards the end of the year, the thing just goes nuts. It just goes crazy, right? Like we saw in 17 after the, a bit after the 16 halving. So whether it's this year or next year, that's, I think, what kind of the longer standing crypto people are waiting for, right? They're saying, yeah, we're getting the halving pump, whatever. Maybe it pumps like crazy to an all-time high before or during the halving, and kind of in that 6 month time frame that we got here on the front half of 2020. But I think that most assume we'll get a nice little kind of recovery pump. Maybe we go back up to that number we hit in 2019 of 13 or 14K, but we'll probably, drop back down, consolidate, hopefully get ready for a bigger move.
Get back into that cycle. Yeah, we also have consensus coming up too, right? So yeah, consensus bump.
Oh my goodness, how many things can happen in 1 week?
Right.
Around consensus. When is
consensus? Yeah, I have to check it out. But while we look that up, I was going to say that I was saying that on Synthetics interview that in our industry, since it's saturated with speculation so much, that certain events like the halving, or let's say mainnet or whatever event comes out in crypto, we tend to over speculate that by a lot, right? We tend to our expectations outgrow the reality, and 100%. Therefore the price outgrows as well. We end up over speculating, therefore the correction comes, and that's when the reality actually sets in. So those events are happen quite often in crypto, to say the least.
It looks like the halving should happen before consensus.
Oh wow!
But only by a few days, right? So I pushed a link in the chat there from Brave New Coin. They basically have 4 scenarios around the Bitcoin halving, right? Because it's all based on blocks, right? So they have May 7th, May 8th, or May 10th at various times, and consensus starts the week of the 11th.
Oh, so wow.
The timing could be crazy. Some people think based on hash rate here that we'll see the halving in April, at the end of April. I don't know if we'll get to that point. But yeah, that would be a pretty nuts hype cycle if we saw all the typical consensus news and everything happening in New York City, which for those, if you're not familiar, it's basically the largest crypto conference in the world. It happens right in Manhattan. We've been there a couple times before. I mean, there's thousands of people that come in for it. And
is that at one time when we caught Arthur Hayes there? Was that consensus?
I think that was consensus. Yeah,
that was awesome.
There's a ton of crypto celebrities there. A ton of people come in. The conference has speakers, all that, yada yada. But it's an exciting time for crypto because 1 year it pumped like crazy. During consensus.
And the other year it was like dumb, right?
But if it does it once, then people are like, oh, maybe it'll pump, and we're gonna get that consensus pump. And another year we got a consensus dump. So we'll see, what happens this year. If the halving happens before consensus or even during it, I would venture to say that we get a consensus dump this year. But who knows?
It's funny, that atmosphere that you see when the market is dumping during consensus. You'll go to the consensus meetings and you see completely different faces. Everybody's kind of like in wrecked stage.
Everybody's on their computers during the speeches.
Yeah, exactly. Have their charts up. During speeches. So yeah, absolutely. Actually, let's jump to this one before we hit the other one. The U.S. government to auction off 4,000 BTC. So these guys are not looking to hodl.
No,
these guys are not looking to hodl. U.S. government is selling off 4,000 BTC that they confiscated from illegal stuff.
Hackers.
Drug
dealers, whatever.
Yeah, and they're looking to auction it off February 18th, which is in 8 days. So, and they've done it before.
Yep.
This has been done before. So it's nothing really new to the market, but I want to be sure that we understand how it's going to work, because you have to actually qualify to participate in this auction. So it's going to be a limited amount of players that are going to be playing, basically for 1,000 BTC that they're looking to acquire. So this 4,000 BTC is not going to be dumped on the open market from government, right? So it's
going to be sold OTC basically.
Right, OTC, yeah. And then, so basically, the OTC guys are getting a pretty sweet entry price on BTC right now.
Potentially,
yeah. So, and given where we are now with the market, I doubt that we'll see much of a selling pressure from these OTC guys that, secure their, auction position and acquired BTC and would dump it on the open market. So I don't think that will affect the open market that much, in the short term. But again, with the things that are coming out with the halving, and consensus and so on, I think we might see some fireworks, later on. But for the immediately, actually, I did plug in some other auctions that they had, and that didn't really affect the price.
Oh, okay.
Yeah, so I did look into past sales the government had, and it wasn't really much of an effect in price. So I don't think it's going to affect the spot market. So it's just going to be done OTC, and some of these guys might, potentially get some good entries into BTC.
Yeah, the most famous auction buy, for those who aren't aware, was Tim Draper, right? Mm-hmm. So whenever Silk Road went down, they auctioned off almost 30,000 Bitcoin.
Wow.
And at the time, it was in 2014. At the time, Bitcoin was hurting. He ended up buying it at like 300 some bucks or 200 some bucks. He bought 30,000 of them, I think. And everybody thought he was nuts. They were like, "You're out of your mind. You've already, by the time he bought him, the price had dumped, so he'd already lost money on it." Right. And fast forward to today, obviously, if he still holds that Bitcoin, he's absolutely cashed in and looked like a genius. So there is some history to these. I am glad that the government does it this way, because then you don't end up with market dumping. Mm-hmm. If they just came out and said, "Hey, we're going to dump on February 18th," you'd have that same overreaction. You'd have everybody kind of move to get out of Bitcoin, when, believe it or not, 4,000 Bitcoin really isn't that much volume for Bitcoin when you're trading, 32 billion on a daily basis. Like, the market, especially today's market, could eat that up pretty quickly over probably about a week. If you were running, say, like a TWAP or a VWAP, I would guess. So, we'll see. Important to be aware of, just like the halving. It's a lot of Bitcoin changing hands, but I don't think it's anything to kind of worry about. On the good news side of things, some interesting data from Coinbase. Bitcoin merchant payments are taking off. Mm-hmm. So everybody who has kind of said, Bitcoin will never work for payments because it's a store of value, no one wants to spend their Bitcoin, not necessarily the case, right? We know people love to spend their Bitcoin. It's just they like to spend it when it's up in value, right? I'm not going to spend my Bitcoin if it's down 20%. I'm going to hold, kind of wait. But, if it's up 50, 100, 200%, I'm going to go get that, Lambo, or in the case of, this article, my coffee, or my, new clothes, or my,
through BitPay, right? That's the biggest one.
Yeah, whatever it is through my BitPay here. Mm-hmm. Backing up this claim, they got some data here. Coinbase Commerce, which is, basically like a plugin for receiving transactions in crypto, they processed $135 million worth of crypto payments for thousands of merchants in 2019. Mm-hmm. So that has worked out for Coinbase. Well done there. And from a unique transaction standpoint via Coinbase Commerce, meaning each individual unique transaction, they saw a 600% increase since 2018. So still a lot happening behind the scenes with Coinbase Commerce, I'm sure, right? I mean, that's, I would imagine, a game of just kind of who and where you can plug in. So there's more growth to be had. I'm sure.
I would actually argue the point where if Bitcoin is rallying, I think people would hold more rather than if it's dumping, because
for a period of time at least,
because you're gonna end up like thinking like you paid something with Bitcoin and then you look back, Bitcoin is at a higher price, so you end up paying millions for like pizza, like that dude, right? Yeah. Since that story. So
I saw my favorite tweet today this past week, which was Bitcoin's officially at $10,000. So that weed I bought back in 2014 was worth $2 million.
Yeah.
Sweet. It's like,
yeah, that was
brutal.
Yeah,
it looks like there's a lot happening on Lightning as well. At least this article is claiming that, that Amazon, Starbucks, and Sephora were the most gifted brands by Lightning users during the holidays. So,
really? Oh.
Yeah. So maybe there was some truth around kind of that sell off for presents this year.
Right.
If Coinbase can see it in their Coinbase commerce. So
Barry is blowing up chat. Where's Zach at?
Did you just realize, Barry?
Yeah. Online booking flights for the L1 party here in Canadistan. So no, you missed it. Zach is he didn't survive the weekend.
R.I.P.
He's recovering. So
yeah.
Think
next time if you're having a beer tonight, think about him. Make sure you don't have one too many. I think that's what happened. But we're filling in for him here. We're rocking and rolling here. That's pretty much the Bitcoin news we have. We got a bunch of ETH news, but before we get there,
VeChain.
Yeah, an important note here on VeChain, man. They're another obviously altcoin that had a big pump, a handful of months back, at least maybe even over a year back, whenever they supposedly linked up with Walmart. Mm-hmm. Everybody knows Walmart. It's Walmart appears to be using the VeChain blockchain. At the end of last year, they started tracking 23 different products using
nothing.
Not a lot of products from Walmart, but a good test case, right? Those were tested at the end of last year. Now more than 100 products are being tracked with VeChain that cover more than 10 different food categories. So, if you've never kind of heard about this blockchain tracking when it comes to food or various products, right?
Counterfeiting.
A lot of it has to do with counterfeiting. Most of the kind of consortium around this, where VeChain's blockchain is kind of the technical aspect, it all has to do around China and Asia, where you see a lot of this counterfeiting. So the others in kind of this coalition are the Walmart China blockchain kind of coalition, if you will. You got PricewaterhouseCoopers in there, and some other kind of China, retail store giants, it looks like. So it's all around that, food quality, food safety, sustainability, non kind of counterfeit goals, essentially, that Walmart has done here with VeChain. But if you're holding VeChain, if you're a fan of VeChain, they've come through on this, it seems.
Yeah. We often have certain issues in like just like, let's say, like Walmart or something, selling like vegetables that are contaminated or something that comes from like, contaminated areas, and they struggle to identify exactly where it came from, right? Where this whole spreading of bad products started, right? So being able to track certain high risk, let's say, produce, would be super efficient to find out and identify. All right, this farmer is giving me some toxic, like
lettuce.
Products. Yeah, exactly.
Right.
Because we had something like this with lettuce recently, where it was kind of contaminated. They had to pull a lot of products, right? And like Walmart's, like these stores, they lose money on it, right? Because they have to pull everything because they don't know which one is not, which one's contaminated, which one is not, and so on. They don't want to risk it. So that's one thing. But another thing that I'm really excited about is that we always talk about blockchain use in enterprises, right? But what really turns out, the enterprise just ends up taking the technology and create their own private blockchain and use it for their own benefit, and doing those things all on the internal side, while the public blockchains don't really get the benefits of it, right? So, often those public blockchains get copied because they're open source for private use. But here, Walmart is actually using the public blockchain, which is,
How much are they using the token in this instance, though? That's the thing.
That's
right?
that's another question. But the fact that they're using the blockchain, the network itself, like,
Yeah.
public network. It's
a good point, right? It's a good question you bring up. Is this a basically a synonym of the VeChain blockchain that they've taken and kind of copied and put together in a private way, or is it the public blockchain? I would guess it's the private version, right? I mean, scalability is always a big thing. If you're doing it for 100 products, that's fine. But when you move up to every product, if scalability might be an issue in some cases there with that implementation. But either way, it's big for VeChain in basically being an older blockchain and continuing that push as a major blockchain network as they've continued to try to do. Barry's talking here. Said the VeChain guy from Wide Right Buffalo is nice. We had a good email chat about Steam It and said counterfeit Mayo tokens. Yeah, let's interesting STO there. You can short all the counterfeit Mayo that's out there. I wonder if is that a problem? Counterfeit Mayo?
I don't know.
It sounds terrifying.
Yeah, that sounds
kind of BLT with counterfeit Mayo. Just ruin your week.
Yeah,
maybe that's what happened to Q.
Yeah, that's what happened.
Oh, got that counterfeit Mayo, man.
Yep.
But yeah. Anyway, so moving on to ETH here, we are just gonna kill you guys with basically bullish indicators on crypto in a variety of ways today. Another one from Yahoo Finance talking about how Ethereum miners are currently holding, i.e. speculating, almost more ETH now than they ever have. So, obviously these miners, right, they go out, they mine Bitcoin, they mine ETH, whatever it is. They have energy costs, they have, operational costs, whether it's paying employees or whatever, right? There are costs that they have to pay. But at the same time, as they mine all this ETH, as they mine all this Bitcoin, they understand that this is a volatile product. It goes up, it goes down, right? If they think it's going to go down, generally they would want to sell a lot of Bitcoin or ETH to make sure they cash in at that price they mined it at. If they think it's going to go up
for electricity,
Yeah, you gotta pay, keep the lights on, you know. However, if they think the price is going to go up, then as we've talked about many times before, they will go and take out loans on that ETH in order to pay those same bills while speculating on the underlying asset, in this case, ETH. So they are almost at an all-time high. It's pretty much touching a last point that we saw in, let's see, that's small. What time frame was that? Looks like, back in Q4 of last year. So towards like mid-October, they timed it pretty well, held a bunch of ETH, sold off there in November and a little bit into December, and since then have climbed in total. Let's see here. They have, I think it was something like almost 2 million ETH across all major miners. So yeah, pretty significant there. A good sign for ETH if your miners aren't dumping on you.
Yeah, I think now that we have these products, the derivatives, we have perpetual swaps, we have futures, we have options. It gives a lot of the tools to these miners to hedge in case of market going down. And at the same time, they can let's say if they need cash, they can go and take out a loan, put up the ETH as collateral, or they can even just deposit it, and just get the percentage yearly, right? Get into lending. So a lot of things that are available for miners where they don't really need to go out and dump it in the open spot market, right? Which is good for price discovery for the product for ETH, for BTC. Overall, it's moving in the right direction.
Yeah. Another bullish point here on ETH was that the head of the CFTC has hinted again at ETH futures, right? So this is something I've talked about last year a good bit, and that I think ETH is going to benefit in a lot of the same ways BTC did around this kind of institutionalization of crypto, right? ETH is very clearly number 2 to Bitcoin and has not had a lot of the same boxes checked when it comes to that kind of institutionalization. Everybody's focused on Bitcoin because of the trust that it's built, and certainly the decentralized and anonymous nature of it, right? We've seen Bitcoin move with gold now, and then basically ETH and everything else for the most part will move with Bitcoin. But that seems to be something that's coming. They do not seem to have any issues with ETH being a security.
Right.
And the CFTC understands that if that's the case, it will likely be treated as a commodity in a lot of the same ways that Bitcoin is. That kind of regulation around Bitcoin and ETH is still very much up in the air. That, I think that is an additional major catalyst around crypto when you have these massive asset managers who have very clear guidance on, hey, when you invest in this stuff, these are the organizations, these are the regulators that are going to be responsible for that, right? So it's another kind of step in the right direction for ETH and kind of that institutionalization of it as we move into 2020.
Yeah, I don't see why they wouldn't have ETH futures, set that up on like CME, I think that's coming soon for sure. But to give it a little bit of a balance between being bullish and bearish, so ETH 2.0.
Yeah.
So ETH 2.0.
Yeah, ETH 2.0. We seem to have hit a snag, but right quick before we get there, right? I'm sure I know you talked about this last week on Dimitri's desk, but one of the interesting points around that comment I just realized could be the increase in volume we're seeing around ETH futures, right? I mean, they have absolutely exploded over the last 6 months. If you look at the open interest on ETH, and certainly the volume around it, it's crushed it. We're over 600 million in ETH open interest futures now. So yeah,
that's huge.
Pretty significant there, but yeah, like you said, it appears that ETH 2.0 has hit another snag. Certainly the ETH 2.0 is the largest catalyst for ETH as they attempt to move from proof of work to proof of stake. And while there's a lot that goes into that and a lot of questions that need answered, and kind of a lot of phases essentially that are going to be completed, it's never good when you have to push back the timeline. Right. So as a recap, ETH 2.0 was supposed to come out in 2020 beginning of 2020 in January. Yeah. Then, as that was not happening, as they were coming out with one of the non-contentious hard forks in December, it was pretty clear that January 2020 date was not going to happen. So they said Q2 2020. Now, because of the way that they go about launching this and basically the multiple clients that are required to run the blockchain for a certain amount of time, which I think they have in 8 weeks. So you have to have, as they say, 3 different clients, right? So Parity's one, GETH, Geth is one. They like to have 3 major clients running the ETH 2.0 blockchain for an 8-week time period. We're in Q1, map out 8 weeks from the time that testing will start. They don't see Q2 2020 as a viable time for ETH 2.0 to get launched. But have said they're 95% certain it will be in 2020. So we've kind of gone from a specific month, January 2020, to a specific quarter. Now we're on a specific year. So if we don't hit this, it'll be out in the 20s. Yeah, in the decade.
I think though, I think it's still it's bullish for ETH because it kind of it outlines the event that's going to happen in 2020, and it gives more opportunity for people to speculate on the outcome of it, right? Or the halving is coming up here shortly, right? We have just under 3 months, right? So the de-risking, de-leverage for ETH when they're going to start the switch, is essentially delayed.
Yep.
So that offers more speculation for people to come in and load up on ETH and for the price to go higher before we have this significant event on the map where people are going to start taking some pieces off the table, right? Because of the risk of what's going to happen, basically.
Yep.
So that can be bullish for ETH. I think I like it like that.
I want to present a super bullish case for ETH. All right. So we just talked about how kind of the institutionalization is starting to happen, right? You've got the CFTC basically saying we want innovation, we want ETH, right? And I think a lot of the reason people like him are saying that is because they're seeing organizations like the Sacramento Kings, right, adopt essentially NFTs via the in-world NFTs via the ETH blockchain. You have stable coins, right, which obviously the government is incredibly attuned to, that are all being built on ETH, right? Even USDT, the largest in the world, moved to ETH, right? You have DeFi, which now has, albeit small, 1.5 billion locked in loans. There is very clearly activity, and there's very clearly financial activity happening on ETH, right? So you have all of this kind of bullish context happening, while at the same time, from a development standpoint, ETH 2.0 is almost here. You're going to have this major switch between your proof of work mining to your proof of stake, setup. And as we've seen, miners are starting to hold ETH. Now, other than the fact that we may be moving into, a bull market here, hopefully, and they would want to hold ETH and then sell it at a higher price, they will need ETH to run large stakers.
Oh, yeah.
Right? So I wonder that over the next 12 to 18 months here, if we don't see the amount being locked in DeFi increasing, we don't see general interest in ETH, right, from speculators, from buyers, whether institutional or retail, happening, but we also see miners holding ETH, can we get to a point where the actual supply of ETH is not increasing relative to the demand? And as we've seen with projects like a Tezos, we run into kind of this hyper bullish period, which certainly will not last, right? But will kind of come as a preface to an ETH 2.0, which just as we see to your point with the Bitcoin halving, it comes out, everyone's like, oh, hey, it still has all these problems. There's still a multi-year roadmap past this point. ETH still has a long way to go. It's more scalable, but it's not super scalable. Price dumps.
It's going to be tough, man, to see that, especially knowing how much is already locked up in DeFi. What is the market cap for all these stable coins? And then, if you have this switch that happens and there's like a major issue that disrupts all those sectors, that's a lot of money, right? That's a lot of movement that will stop between the stable coins and DeFi and so on. Like that can escalate into a crazy issue. So I respect them for taking time to go through all these audits to really test it before they release it, because there's so much hang on this, right? That would be if they messed this up, it would be huge.
It'd be disaster.
It'd be GG.
Complete disaster. Yeah. So we'll keep you guys posted. I mean, ETH 2.0 is something we've been talking about for months. I'm sure the date will change again. But yeah, I mean, it's delayed, right? Not good for everybody who's waiting for that staking, but there's some, there's a lot happening behind the scenes. I would guess that we see the ability for users to stake ETH in 2020. I think it'll be towards the end of 2020 that you see that, and I'm sure there will be issues, but I do still think we see that in 2020. We got Scott Harris Firestone saying go EOS. So there's a lot of competition out there. EOS should be launching their voice beta here in about 4 days, man. I hope you've been holding EOS for a while. That's pumped up almost $5 now, so you should be doing well there.
They're launching that beta, so I'm interested in how that's going to turn out. This is an interesting piece of news here. ETH 2.0 on mobile phones, huh?
Yeah, this is one of those things that I've been talking about for a long time. I think if we can get nodes to mobile phones, that's going to be massive.
We haven't really seen that much, right?
Not really. You have wallet applications that I think theoretically you could kind of backdoor nodes through. But I think just the concept of being able to run basically like a light node on a mobile phone could be huge for getting users into crypto, right? Because you can go out, you can buy ETH, you can go out and buy Tezos, whatever staking project you want, but the things that you have to do to actually stake have so many steps that people are never going to do that, right? I mean, that's why we've seen such kind of a coagulation of staking happening on exchanges, because exchanges make it easier for people, right? Exchanges are the one-stop shop. Do you want to stake? You're going to get 6%. We're going to take 1%. Yes or no?
You
yes.
have to go through all that trouble.
They'll handle it all on the back end for you. The problem with that from a proof of stake standpoint is that then you have one entity who controls all of the staking. Right. And they kind of dominate the network, and they don't act as a good, kind of a good ecosystem participant. But if somebody is able to do this on a mobile phone where it's a point and click setup, and they're able to solve the issue of battery life and bandwidth usage,
5G,
maybe it's 5G on phones, then I think that could be something massive where, yes, you're buying the ETH token, yes, you want to speculate on it, but the fact that you can, quote unquote, help run the blockchain on your phone, I think is a super sexy way to sell staking and to sell crypto. So there's
what's the company?
Yeah, there's a company behind it called Nimbus who is doing this. They interestingly enough received a pretty sizable grant from the Ethereum Foundation in the size of $650,000 to continue working on this. You may have seen it on Twitter, but the entire Nimbus team was in Brussels, and they took one of the test nets that's out for ETH 2.0, and we're running it on their mobile phone. So the picture, as we'll throw here in the Layer 1 chat, it's a video. Yeah, is basically the test net running on all of the mobile phones. It looks like from a hotel room. So yeah, it's pretty cool. Another what would be an awesome innovation if they can get it done and kind of implement it on ETH 2.0 whenever it does launch.
Yeah. Absolutely. So to wrap up ETH, the last piece of news we have here is Consensus. Consensus divides investment in software businesses, cuts 14% of employees. And, we kind of heard this in the past many times from Consensus, where they're scaling down on certain ventures that they've been part of. They started so many different things at once, and they wanted to see what catches on. And basically those that are not catching on, they're cutting them, cutting funding for them. So they have many projects that are basically didn't turn out to be as what they were expecting, which is normal because, when you're running a startup and spinning up different other startups within this, ever-changing crypto industry, things can, go bad. So most of your projects are most likely gonna die. And we're seeing continuously from Consensus where basically they're adjusting, where they're cutting funding to certain divisions, right, that they were investing in, and therefore, they're laying off also 14% of their employees. But to your point, what you're talking about is interesting. As they cut off these, funding to these ventures. You were saying something before the podcast that was interesting, and what you were thinking is going to happen, or
So and just to be clear here with some context, right? So the Consensus event that we talked about earlier, is different than the Consensus company, right? One is an event, one is a company. Consensus, the company is spelled with a Y, so CONSENSYS, versus the event is spelled with a U at the end there. So anyway, the founder of Consensus is pretty much always been Joseph Lubin, one of the co-creators of Ethereum back in the day with Vitalik, and they've had this issue before, as you said, right, where they've cut a ton of different people from the squad, and they haven't gone about it in a great way. Like the last time they did it, no one really knew it was coming, and then everybody else kind of, within Consensus, which at that point was thousands and thousands of people, was scared that they were going to lose their job. And in the first time they made these cuts, they came out and they kind of had like this town hall, as they called it, where it was basically just a giant video call where Lubin and some others could talk to you, but you couldn't talk to them, and it was like this just kind of weird, setup. Morale was low. So I think people get worried about this for ETH to some degree, because Consensus is such a, they have a variety of software products that exist in the ecosystem, the ETH ecosystem. Like MetaMask is a big one, right? So it's like, okay, well, what happens if Consensus goes down? I think this is just a move for Consensus to continue to become a a working business, a profitable business. Joseph Lubin has basically been loaning his ETH to Consensus over the years because he has, hundreds of thousands of ETH. And while that works when ETH is $1,200 because you're a billionaire and you can keep doing this, when it's $85, you have quite a bit less capital to loan to all these hundreds or thousands of different employees that are employed under your business. So, like you said, they're cutting 14% of employees. But the key here is that they're dividing investment in software businesses. And from what I've seen, they will continue to certainly work with or fund or kind of, continue to incubate the companies that are working, like Infura, like MetaMask, right? But those kind of one-off startups that maybe haven't found a great product market fit in crypto, they're asking them to go out and raise funding, right? So at the same time, Consensus is raising $200 million. Internally, they're cutting 14% of people, and they're, I would imagine to some degree, saying, hey, you guys are cool. You're with us. Yeah. You get some of this 200 mil. And others are like, listen, we've already given you 5 mil, 10 mil. Yeah. You need to go out and raise money from other people. So kind of the inference that I've seen is that the employees will be larger than 14%, right? The amount that are cut. It could be as high as 20, 30, 40% when so many of these other Consensus launched startups go out, try to raise money externally and aren't able to because they're not, kind of like this
must be really
strong
tough.
Business.
It's like, when you're trying to raise funds coming from Consensus, they'll be like, well, why is Consensus not funding this? Yeah. They're like, well, they, I don't know. They said, go out there, see what you can raise. Right. That's going to be a tough fight for them.
It's not a spot you want to be in as a startup. That's for sure. I mean, it's just additional drama you have to worry about while you're trying to execute on other things. But we got some comments here. Scott said, can ETH really succeed with its transaction fees? Will it always be cheaper to do finance on ETH over the current system in place? It's a good point, right? With the transaction fee setup that it currently has, why are people going to kind of pay for that to use ETH? I think, they might get some help with the merge to ETH 2.0 and to proof of stake, but not a ton. We'll see.
That's always going to be
we'll
in the
see.
back.
It seems to be working so far, but we shall see. So a couple more here. This has been we had a ton of news on this episode. This has been fat, but we got two final things here. We got Litecoin
and BNB.
And good old BNB / Binance. So real quick, whenever I saw this, I smirked because Charlie Lee is kind of back at it again with Litecoin. He, a la Bitcoin Cash and the 12.5% tax that Bitcoin Cash was trying to impose on its block, its miners. Litecoin is trying to do the same essentially, or at least Charlie Lee is suggesting that a 1% donation of the total block rewards that exist within Litecoin should go to the Litecoin Foundation to fund development. That's his solution to underfunded initiatives. So, Litecoin, most other projects, cryptocurrencies, tokens, right, whatever you want to call it, struggle from this problem where you have a lot of participants who come in, they buy the token to some degree or they don't at all, and instead of really contributing to the ecosystem, contributing to the growth of the project, they mostly extract value out. Right. Especially staking or mining networks. You come in whether you have mining equipment already or not. Maybe it's easier to mine on Litecoin than it is on Bitcoin. So you come in, you mine all this Litecoin, and you just dump it on the market, and you don't really do anything to push Litecoin forward as an alternative.
We've talked about this on I think last episode Layer1Live, specifically about Bitcoin Cash.
Yeah,
how they were trying to do that. And, my point was that the fact that, exactly what you said, right? So extracting value without really contributing to the network. And this tax will essentially force them to, will propose tax to force them to contribute into growing the ecosystem. But then, the next question is like, well, where's the money going to? It's going to the foundation. What is foundation's plan? How are they going to direct this into investing and growing this ecosystem altogether, right? That's going to be the next questions from these miners. Like, okay, where's my money going?
Yep.
So
yeah, is it worth it, right? 1% in what for medium-sized miners is already a small, margin percentage there is significant. So yeah, I mean, Litecoin's funny, right? I mean, it's had its halving already. It saw a giant, 40-50% pump, something like that, maybe even more on the way up to the halving, and then dumped. And the price has been moving a little bit with Bitcoin, but they're not having kind of this similar breakout moment, at least from a PR standpoint, that I think ETH and Bitcoin are getting ready to have. Even Ripple's done decently, talking about an IPO, and they purchased MoneyGram and all this other stuff. Litecoin's kind of struggling there, and it sounds like while the donation idea might help fund development and make sure the foundation can continue to run,
keep their jobs.
Keep their jobs. It doesn't sound like people are super willing to do that, or that they're not going to be super willing to do that. So, but that's
interesting stuff about the BSV and Bitcoin Cash. Their halving is coming up quicker, from what I've heard.
Yes. Yep.
Yeah, and you can see how that's reacting. It's crazy. You can see the battle between the two. It's just like those things are pumping like crazy. So it's kind of interesting to see how that happens in other tokens, and then how we're gonna have it in Bitcoin, right?
Right.
To have like similarities there. But anyway.
Yeah. So that's Litecoin.
Binance
here, yeah, man. A lot going on with Binance. Some quick points here. Good job to them. I think Tron did something similar. They donated about $1.4 million to help with the coronavirus. So, obviously they have a global reach. CZ is from China, right? They have roots in China. So good to see them giving back there. Some other points here. Binance, I know you like this, now allows you to short BNB on Binance.
Oh my
so
God,
traditionally, if you wanted to short BNB, I think the only place you could do it, like the only legitimate place you could do it, was FTX. I'm pretty sure you can short it there, but Binance is now going to offer it, which kind of in a 5-second period, I was like, oh, that's going to be bad for BNB, and then I was like, wait a minute, no, this could be good for BNB, right? Because
because you need shorting, you need the ability to short in the market, because it provides a specific function to have efficient market. And it's crazy because this really bothers me, because Binance did it before. They did it with some of the IEOs that they had, where they would disable shorting and have just the buying, leveraged buying positions that you could put on, but no shorting. And then you have this huge pump and then huge dump, and the price is not behaving the way it should be, because if you have short selling available, then you have short sellers that come in, basically take position to the downside. If the price goes lower, then they start taking profits, and then the price starts moving slowly down in this direction of making these wedges and so on, right? So it creates an efficient market. You have to have you have to be able to go long and short on the platform, and I think Binance is realizing that after they've had mistakes with what is Matic, right? I think
Matic was the bad one.
Yeah, Matic was a really bad one. It's crazy, and they I've heard they even do. It was on Twitter. Some traders pointing out where they'll have shorting enabled, but then if they see some selling pressure, they'll start disabling it, right? So they start flip flopping, enabling, disabling, shorting, and they start to kind of try to manipulate kind of the price, but really they're just hurting themselves. And I'm glad they they have this available now. Again, if you have shorting and you have lots of people shorting BNB and the price continues to go higher, they're going to be squeezed out and the price is going to pump.
That was going to be my point, right?
Yeah.
CZ's not stupid. I think he's been waiting to do this, but he wants to do it at a time where it's not going to negatively affect BNB. I mean, it hit like 25 some bucks over the weekend. And when BNB is, to me, one of those alts, and again, obviously nothing we say here is financial advice, but it's one of those alts that when it gets going, it rockets.
Yeah.
Right. So the shorting, to your point, if people start going short on BNB, those shorts getting squeezed and liquidated are only going to fuel BNB's growth. And I'm sure he knows that.
Buy back.
So yeah, I mean, Binance, listen, I was talking to Zach Lee about this. You know, they're doing a good job of expanding into this kind of new, derivatives world, if you will, that is dominating crypto. You know, they've got all these fiat gateways popping up, and if you look at total volume, they're doing over $2 billion a day across all of their products in total volume. So, you know, while their futures aren't number one futures, collectively Binance is basically the top dog in crypto when it comes to exchange facilities. But you know, one other thing here that they're doing as a way to kind of make sure the pump continues, if you will, is they're now allowing you to borrow against your crypto to fund your futures trades. So the scenario that I presented,
that's
in before the show, as we were kind of going through this stuff, was, you know, if you buy one Bitcoin at $10,000 and you put up half of it into some futures trade to, you know, go long with leverage, right, 25x leverage or something, Bitcoin drops a bit. If you don't want to be liquidated, what do you have to do? You have to add margin, right? So maybe I add my maybe I add another 0.25, you know, and I've got 0.25 left. Well, on top of that, I can also take the final 0.25 and go and borrow against it to get more cash to buy more Bitcoin, right? Or to get more Bitcoin to add to my futures trade and kind of double down or triple down on that. So
you're basically using your Bitcoin as a collateral to get a loan, and then use that loan to put on a position in a perpetual swap.
Right. So
contract.
So what people are going to do is they're going to use that to ride the pump, because they'll assume that the pump will pay off whatever crazy interest they're paying on a daily and weekly basis.
I can see a disaster coming.
And it's just going to be disaster for people, right? Where that works for a long time and they're up like 200%, and you know, they owe $6,000 in interest fees over a 7-month period or something. And instead of cashing out of the trade profitably, they're going to get greedy and they're going to hold it, and then it's going to start going down, right?
Yeah, it's going to be crazy, because if you have liquidations that happen within the debt market, right? Obviously, and I mean, they use collateral percentage that's pretty high right now because of the volatility. But if you have like this significant impact in the debt market, when you have all these liquidations, that can be devastating to just the broad market overall. Like if you have, we haven't really seen like defaults, right, in crypto. So if there's a black swan event and we start getting these defaults, when you have these people that are doing crazy stuff, like, you know, it's like having a credit card and buying Bitcoin on credit card and going to BitMEX to like trade it. Like, pretty
much, yeah. Crazy. I mean, I don't think we have to worry about defaults with Binance because it's more centralized. There's more security there, but I think the biggest thing for me is that it's going to speed up the liquidation process, right? Because Binance knows that you've taken out these loans in Bitcoin and you owe them interest, right? The downside margin that you have will be less, because it'll be whatever your downside margin is minus the interest you owe. I would guess, right? So if Bitcoin starts dumping and you know you start, like, your liquidation point is going to move up based on that interest, right? So you know, it might not take as long, at least on Binance, for us to see some crazy hammers down, you know, some of these giant red candles off the top, because you have people that over leverage themselves. You know, we got some good comments here from our main man Jason from Block Arcade. What's up, Jason? He said, rumor is BNB has smart contracts coming soon. Thanks for popping in. We were talking about BNB Cloud right at the beginning of the podcast. I wonder if there's some, if there's some sort of connection there. Saying, you know, while the smart contracts might be centralized, imagine how quick it will get up and running because of the Cosmos SDK. I mean, it's a good point, right? It would make sense that CZ starts to try to take on Vitalik a little bit and get that ecosystem going. He says that, Jason always says, I've never done a leverage trade and I like it that way. Yeah, man, you know, stick to what you know, right? There's nothing there's nothing worse than coming up on that liquidation moment.
Yeah.
You know, it's not a fun time. So
yeah, I remember my first liquidation.
It's like a first beer, but it doesn't taste good.
Doesn't taste
that's
good
for sure. But
the last piece of news about the Binance was the guys IEOs are
they're back. We are ready, man. Yeah. We got Wazir X out of India. They're basically an Indian crypto exchange that Binance, acquired to some degree, or at least partnered with. And Wazir X launched their own token, which of course Binance helped launch for them. And if you got in on the IEO, congrats, because it was priced at about 2 cents. Saw the typical IEO dump, but still sits at almost 10 cents. So even after the IEO dump, you're still up 5x on that token if you were one of the lottery ticket winners. So, if you're not familiar with the way the IEOs work, essentially you have to hold BNB in order to have a chance to get in on these lottery tickets. And the more BNB you have, the more lottery tickets, the more chances you get. And if your ticket gets selected, you have the ability to pay Binance for their, new IEO token. BitTorrent was the first one. We saw that go crazy. It went like 12x. Everything else, has pretty much gotten crushed until this point. So, potentially another, bullish indicator.
That's because they stopped messing around with longs and shorts buttons, man. Yeah. It's coming out. But yeah, that thing did pretty well. I'm actually I'm really excited to see more exchanges, more liquidity providers in countries that are distressed, like India, Argentina, or all these places, or like Latin America. We have more and more exchanges come out and provide liquidity to these people, which is going to provide more demand for BTC and crypto in general at fair market prices. This is awesome.
Yeah. Yeah, no doubt. So, congrats to the Wazir X folks. Congrats if you get in on that IEO. It's like I said, it might be another kind of bullish indicator here.
And that token is working. That Wazir X token is working the same way as BNB is for Binance, right?
Yeah.
And then you have Wazir X token that's on for that exchange in India. That they have acquired. So
yeah, for sure. So very, very cool there. Barry, we'll see you later, man. Yep. Take it easy. Appreciate you stopping in. Appreciate everybody stopping in. We doing this pretty much every Monday. So if you want to kind of get a quick hour or so breakdown on the news in crypto, we've got you. For those of you listening after the fact on anywhere you can find podcasts, we appreciate you guys as well. Final piece of news here, another bullish point for Binance is that they have acquired a former COO of TradingView to help push forward basically help the fiat gateways that Binance is trying to open, which is a point you brought up, a point I've talked to other people about, where, when you're a giant company like Binance, right, and your business depends so much on interest in crypto, right, people buying and selling crypto, and that volatility, while they're not, speculating on tokens, right? And they're not subject to that volatility. They're still subject to overall crypto volatility, because they're an exchange. So as they, they're certainly going to do things like IEOs and whatever this Binance Cloud is to kind of expand the business that they offer. But one of the ways that they appear to be looking at bringing new people in, right, and building that volume and that business, outside of kind of this traditional way they've done it, is by opening these new fiat gateways where, Coinbase is not really focused on, trading the Russian ruble to Bitcoin, right? Or trading the Korean currency or Vietnamese currency or, whatever it is. But Binance clearly is. They're trying to onboard every single fiat gateway possible so that they have access to not just the major currencies like the euro and like the dollar and whatever the case may be, but they also have access to the smaller ones. So they're going to scoop up all that little retail demand by saying, hey, just trade trade the peso, trade the ruble, trade the whatever. And I think it will prove to be a smart strategy.
Yeah, I think there's huge opportunity there in those countries because, I can't wait until the day when we have those pairs and we can take a look at it and see maybe how certain central banks' interest rates, decisions and changing interest rates, increasing or decreasing, will be reflective of how like that ruble will trade against Bitcoin. That's gonna be crazy.
Good point.
That's something we did in FX to see like, all right, we have euro dollar, right? We have two economies, and what is their projection for interest rate increase or decrease, right? And then we can make a prediction like which way it's gonna kind of go, the trend. But then when you have crypto in it against these, that's gonna be huge.
God,
especially in the countries that like are pretty volatile with their interest rates because their economy is struggling. So
that's a great point, man. That is wild. That's going to be nuts.
Crazy.
Iskander Malikov is the former COO of TradingView. He's got some work to do here because that's a great example, a great point you brought up about kind of expanding your revenue opportunities.
Mm-hmm.
Now if you can kind of speculate on some of these changes or whatnot. You're already in exchange, you're already moving assets, right? Now will Binance move into fiat and into some kind of the world of forex here more than they have already. Get ready. Give it a few months here. They'll just go and buy it, some giant forex broker, and then you'll know they. And you know what?
I wouldn't be surprised because of the forex retail business kind of. Not dying out, but it's slowing down a lot, right? And then I'm sure there's so many brokers or exchanges that would be like, all right, cool, man, you can, pick me up,
A lot of the customers that trade forex, crypto is not far off from forex,
right? Yeah,
at least from what I've heard. It's a lot of similarities, kind of moves in similar ways. If you can go and buy a broker for that reason to get connected into that network or achieve the necessary licenses you need in each country, great. But if you can also bring in additional customers, to trade forex on Binance Forex, essentially, and also crypto on regular Binance, that's big. So you guys, you heard it here first. Binance will be acquiring a forex broker. Just who knows which
Forex.com.
Yeah, just long every forex broker that's publicly traded.
Yeah,
kind of thing here. Maybe you'll get lucky.
Synthetics offers already, like the pairs, that you can trade against, like euro, I think against euro and so on. So derivatives are catching up to it. But yeah, that's going to be super interesting. I can't wait until that happens.
Yeah, for sure. Well, on that note, I think that's all we got, man.
Yeah.
We were missing Q this episode, but I think we crushed it. So.
Yeah, absolutely. Yeah. Hopefully it gets better quick.
Yeah.
So we can get back into things.
Stay away from that counterfeit mayo, man.
Yeah, exactly.
It's dangerous. Oh my goodness. Well, hey, listen, again, we appreciate everybody swinging by. We do this every Monday. For those of you listening on the kind of recorded version after the fact, don't forget we've got some awesome interviews coming up this week. We've got Crypto Kaiju. We've got our main man Pete. Q&Q will be interviewing from Liquid Apps. So if you're an EOS/ETH fanatic, definitely make sure to take a listen on that. And of course, trader in the space, you got Dimitri's desk. So we got all pieces covered.
Tomorrow, Dimitri's desk at 5 p.m. Eastern, and then Friday we do that weekly wrap up with Commitment of Traders report that I go over. So that's gonna be at 5 p.m. Eastern. So you got the whole schedule for the week.
Boom. Yeah. Stay frosty out there, friends. We'll see you next time.
Boom.